you have a situation where there's been massive short positions by the commercial banks across the board in gold and silver that have been literally bleeding them dry for the better part of the last year. And this was an opportunity on the Trump euphoria to push the price down a little bit to get the algorithms to start selling, which then triggered a pretty large sell-off. And what you're seeing is the managed money that was very long has sold a large portion of that position, which means the commercial banks go the opposite direction. Not only are they covering their shorts, they're taking the longs on the other end. This is to be expected. I was wondering how these banks would ever get out of these short positions, and I think this is an opportunity for them to do that. But in terms of, where this is ultimately going, I think nothing has changed at all. In fact, look, Trump is a proponent of very low interest rates. I mean, he'd like negative interest rates if he could. During his last tenure, he was calling the Fed boneheads for not implementing zero or even negative interest rates. And so when you talk about a situation of lower interest rates and a weaker dollar, that's bad for the purchasing power of the currency. Certainly that's good for the banks, that's good for Wall Street, but it's also very, very, very inflationary and ultimately leads to the same place. In fact, I think that it might even accelerate the inflationary effect that will start to weigh on the dollar's value soon. And what happens is that lately, as the front end of the market, the bond market, the yield, the rates have been pushed down, the back end's going up commensurate, if not more. In fact, they've lowered the front end by 75 basis points, and the back end is up over 80 basis points over that same period of time. In other words, the 10-year treasury, which is the most important treasury. It's the one that is tied to the mortgages, it's tied to the credit cards, to the auto loans, it's tied to leases, commercial leases in terms of real estate. So yeah, I think that this was to be expected, and it shouldn't shock people. And to see it move in the direction that it is going, when you see the stock market and cryptocurrencies taking off the way that they have, again, it's only exacerbating this correction, which is really something that the big commercial banks, I think, are welcoming. Now, at the same time, where this becomes kind of dicey is that you have half of the world looking at these depressed prices as an opportunity to load up on gold and silver at subsidized prices, that being the central banks and the BRICS nations. So yeah, this is the market exhaling and irrational exuberance, if you will, because while this will be good for the country on many levels, it doesn't change the fact that even if you had a guy like Elon Musk come in and trim all the fat, all of it, and we get into a much more streamlined situation with the government, the Congressional Budget Office, which is a nonpartisan group out of Washington, maybe the last nonpartisan group, has come out and said that by 2031, in just 4 years, 100% of tax revenue goes just to pay the interest on the debt and the mandatory entitlements like Social Security and Medicare. And how do you retain your status as the supreme authority in the world, if you will, in terms of militarily and in terms of financially, when you're borrowing things like military spending, which is discretional? Everything that is discretional would need to be borrowed.
Look at Warren Buffett. He's got the most money on the sidelines that he's ever had. And this is a true value investor. He doesn't see any value. The markets are certainly not asymmetrical, meaning low risk, high reward. The risk and reward are pretty symmetrical. You have high reward in theory, but high risk. I don't like that. I'd rather have virtually no risk and high reward. That's harder to find, but that's, to me, what silver has always represented. And but this is a situation where, there's still a long way to go. He hasn't even taken the oath of office yet, but this is look, people have every right to be optimistic and to to look to brighter days, green shoots, like they used to say. But I don't think, I think one of the things is he's inheriting an economy that's far worse than we were led to believe.
For many years, we have seen the Treasury market being the preferred vehicle for savings, and that is ending. And this is where things get interesting. This is why one of the reasons you're seeing the back end of the market go higher. You're seeing interest rates on the 10 and the 30-year Treasury go higher because they're being sold. They're being sold by countries that would traditionally buy them, which would lower rates, because they don't trust the United States anymore. They see the inflation that is being created. They do not want to end up on the wrong side of the West the way that Russia has. And so they are finding assets like gold, which has doubled the performance of the 10-year Treasury over the past 25 years and has no counterparty risk. We see, of course, the BRICS are continuing, especially after what the Bank of International Settlements did to the BRICS just a few weeks ago, which was one of the grossest things I've ever seen. And we can talk about that, but it has, I believe, crystallized the resolve of the BRICS to 100% continue their endeavors. So let me tell you what the Bank of International Settlements did. We've talked a lot about the BRICS creating a single currency. And even Putin came out and said we need to achieve a greater integration of economies and increase the quality of economies to a certain compatible level before we do that. Well, that'll be all of the other countries that will be admitted into the fold. Brazil takes the reign here January 1st, and their stated goal is to integrate all of the other countries into the BRICS. Over 45 have expressed interest in joining. I think 30 plus have formally applied, another 15 or 20 informally applied. We already have over 30 plus countries that are watching as an observational partner. But one of the things that I've talked a lot about with the BRICS, Frank, is that they have developed something called M-Bridge. And at the meeting in Novigrad, which coincided with the G7 meeting, and I talked probably on your show about this, the Saudis were invited to that meeting. They turned it down and instead sent their meeting to, they turned down the G7 meeting in Italy, which was the same time as this meeting in Novigrad. And they sent their delegates to the BRICS meeting, where we find a lady named Dilma Rousseff, who was the former president of Brazil, and she's the head of the BRICS New Development Bank, came out and said that at this meeting we have agreed in principle to a new settlement currency called the unit, and it will be traded over Project M-Bridge. The unit will be a 40% gold-backed currency, settlement currency, not a BRICS currency, but a settlement currency. The idea was that through M-Bridge, and I'll get to that in a moment, each country would trade with one another in their local central bank digital currencies. Digital yuan for digital rupee, digital real for digital ruble or whatnot. And then when it comes time to settling for energy, they would use the unit token, which is 40% gold-backed, deliverable upon request, and traded over Project M-Bridge, along with the central bank digital currencies. Project M-Bridge is a cross-border payment system that was developed by China, Hong Kong, Thailand, and the United Arab Emirates. It's operational. It went into operational effect at the end of 2023. And it, ironically, was also co-developed or partnered with the Bank of International Settlements and their new, what's it called, the Innovation Hub at the Bank of International Settlements. And right before the meeting, Saudi Arabia became the fifth full participant in efforts. So you had China, Hong Kong, Thailand, UAE, and now Saudi Arabia, where we learned that not only would it be the cross-border payment program for these countries to trade their central bank digital currencies free from SWIFT intervention, but that it would also be the vehicle to trade M-Bridge, or to trade the unit token. And so I was doing an interview with Michelle McCory from Kitco, and she's one of the best interviewers I've ever been interviewed by maybe the best. And she always pushes back. And when I talk to her before every interview, she says, I agree with what you're saying, but I'm going to push back in the name of journalistic integrity. Okay, Michelle, that's great. And she said something to me, Frank, that I've thought about for a long time, but I just foolishly let my mind gloss over it. And I shouldn't have. It was a mistake on my part. And what was being said, or what she said to me, she said, Andy, isn't the Bank of International Settlement, aren't they a Western institution? And so, yes, I said, you're right, Michelle, they are. They are a Western institution. And so we're talking back and forth. And I'd say, well, maybe the idea is because the West has developed something called Project Cedar and Project Agora. And these are developed by the Fed, and it's a cross-border payment system for the West. And maybe the Bank of International Settlements and the IMF, because in listening to the BRICS and their statement that came out of their big meeting recently, it was strange to me that they were saying that they wanted to integrate with the IMF, with the BIS, with the WHO, with the United Nations. And I'm thinking to myself, why the hell would they want to do this with these Western institutions? So I say, Michelle, maybe it's that the bankers realize that they can't have the one world currency they've always wanted to have, but maybe they can have a one world system that they can control from the top, the rails, if you will, of this new system, and they can pull the strings from the top.
And so this is the path that all elected officials choose. That is a much easier path, and that is inflation over austerity. So, yeah, precious metals, this pullback, I guarantee you that the BRICS countries, Russia and China and India and Saudi Arabia, and all of these countries, they're not upset about this pullback. I think they're using it as a subsidy to continue to accumulate in an environment that ultimately will be defined by massive inflation and lower interest rates, which ought to ultimately move towards higher interest rates on the back end of the curve, because no one in their right mind will buy and hold our treasuries of any duration, which I think are uninvestable right now, unless the rates go higher because of this inflation, because of the history of weaponization, and because of the default risk. All of these things, the long-term investor is thinking. The front end of the curve, the short-term rates, that's a whole different story. And one other thing I'd like to mention, for the talking heads who say, well, rising rates on the 10-year is very bearish for gold, I say BS to that. Gold has gone up month after month after month after month after month with rising yields on short-term treasuries, which are far more attractive in my mind than on a 10-year treasury. I would much rather own a 6-month treasury paying 5% than a 10-year treasury paying 4.8%. I don't care how high those rates go until they get much, much, much higher. Then we can talk about those rates affecting the desirability of holding gold. But at this level, no, that's not the case. This is just commercial banks cleaning up their balance sheets and the managed money chasing a higher yield in the risk on trade in stocks and cryptos. But it doesn't change the narrative one bit for precious metals, and the knowledgeable investor would understand that.